Think you need 20% down to buy a home? That myth keeps more families renting than anything else. And today, I'm breaking down what is actually possible from 0% down to 20% down and everything in between. My name is Kyle Powers with Haven Real Estate Group at eXp Realty, your Manhattan and Wamego real estate expert. I have helped hundreds and hundreds of people across this area buy homes from, again, starting some of them with 0% down, utilizing certain loan programs, and anything in between from there and all the way up to 20% down. And today, I want to break down and see what actually works for you and for your family to actually buy a home and start building equity today. But before we start, I want to know, what is the biggest thing stopping you from buying a home? Is it down payment? Is it credit score? Is it interest rate? Or maybe even closing costs? I have helped many buyers throughout the years on overcoming all of those obstacles. So I want to hear from you. Put it in the comments below. What is stopping you from actually buying a home? Let's start with the biggest myth in real estate. And I don't know how many times I have to go over this, and it's the 20% down myth. I talk to first-time home buyers day in, day out, and I talk to them all the time, and they always say, well, I don't have 20% down, or I can't do it because I don't have the money, and blah, da, 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 da. You guys, I'm telling you from the bottom of my heart, please listen, you don't need it, and it's okay to not have it. Is it great when you do? Absolutely it is. But not everybody's going to have that, myself included. Actually, the last two houses I bought for my actually, I don't think I've ever put down 20% investment properties or personal properties. When I bought my first house, I bought it FHA and I used 3.5% down. They didn't have a down payment program, which was 3% down. So there are differences between 3 and 3.5%. Those are typically the lowest unless you're utilizing the 0% down. And then actually when I bought my house that I'm living in now, what I actually did was I put down 10%. I had the 20%, but I used that additional 10% to go remodel my kitchen and do some other things on that side of it, which that's a whole different ballgame that I can help you with as well. But today we're talking about the 20% down. I've actually dealt with clients of mine who were waiting years and years and years and years to say, well, I don't have 20%. I'm waiting for this and waiting for this. And I actually literally, I educated them and I was like, hey, listen, I'm fine with you waiting if you want to wait. However, if you want to get into a house and actually do this and get into it, we can get you in sooner. Light bulb goes on, they say, holy cow, we can buy a house, not throw money away in rent, and we actually got them taken care of. So there's a lot of stories like that, and I want you to be one of those success stories. So if you think that you need 20% down, please, please, please understand you do not. The next section is 0% programs. You guys, here's the crazy part. We live in a military town, right? VA loans, they're there and they're fantastic, and I help a lot. I would say 50% of my business is helping military veterans and military personnel getting into homes and getting into, I actually put one under contract just yesterday about a duplex where he's gonna live in one side and rent out the other. And that's the goal of actually building your portfolio. Again, whole different thing that we can talk about later. But as of today, there's actually other programs. Let's say you're not military personnel. If you are not, we actually have another program. It's called a USDA Rural Development Loan. There are loan programs out there that you can get zero money, 0% down, and you can actually get into these homes. There are a lot of qualifications. I have closed a lot of those. I've got a couple of my lenders that we do this quite often. And so what that looks like is there's stipulations, can't be in a big city. So Wamego would be a good one. St. George would be a good one. Riley would be a good one. And then you have income limits as well that come into that. But my point being is that there is a way to get into a home. Now, you're going to sit there and say, well, Kyle, what if we do this? What if we do this? Well, what's your goal, right? Like, I'm obviously not going to put you in a position that is going to potentially hurt you. So I'm going to make sure that we get you into a home that you can help equity grow, and we can continue to do that stuff. But I want you to make sure that we understand all of that stuff. So there are options. If you have zero money down, but you make good income, there's a way that we can do that. And again, I want to be very clear, good income doesn't necessarily mean you're making six figures. We've got people that are making sub six figures and being able to buy these homes with 0% down. So there's a lot of options out there. If you have any questions, I'd love it. Put it in the comments below. And if you want to reach out to me, you can always do that as well. I'll shoot my email and or phone number at the end of this video here today, or put it in the comments and maybe I'll shoot a video about it later on today. So put it there. The next section we're gonna talk about is low down payment options. Even if you don't qualify for 0 down payment or don't wanna do that, or you want to live in Manhattan, which is fine, what you have the ability to do is we can actually go in and we can turn around and get you into an FHA loan, which is commonly known as the first-time homebuyer loan. Unfortunately anymore, there's no like first-time homebuyer grants or anything that way. They do come out, so if you do want some grant money and stuff there, ask about that, because we can find those. It just depends on timing of when you're looking to buy something. So that's on that one. The next thing that we can do is the next one is there is an option out there that is a 3% down payment or down on a conventional loan. So there's a little bit difference, a little bit less money down on 3% conventional. There are some requirements and some certain things that we can do. The FHA is a little more stringent, but it's with like lower credit scores and things there versus that conventional if you just don't want to take all that money out of pocket. So those are the two ones that are low down payment options that I would definitely recommend we talk to you and your lender about and get you taken care of there. Next section is why people choose 20% down. So I know, just like with me, I always ask myself, why do people still choose that, right? Like, obviously I know, but the reason being is that if you choose some of those lower down payment options, you will have certain things that will come up, right? You're going to have PMI, which is called private mortgage insurance. There's additional cost because you are putting so low of money down. There's additional money that you are going to have to pay on the monthly. It can be anywhere from $100 to $200 additional each month if you don't put down that 20%. Now, fun fact, this is what I did, is I actually went in and paid off my PMI up front. It was still cheaper than putting down 20%. Sometimes wouldn't necessarily always recommend that, but that's an option. The next thing is that you actually, if you put down 20%, you have lowered payments. So there's that option as well. And then sometimes people are looking to actually invest that money and get that rate of return that obviously goes up the lower your payment is. And then the other thing too is if you are in a competing offer scenario, like if you've got a VA loan, which is 0% down and no cash in the deal versus a 20% down and you're bringing all the cash to the deal, as a seller, it's going to look a little better on 20% down or on a low down payment options, things there, because it just makes you look like a much stronger borrower. Even though you're low down payment, you're probably still a very strong borrower. It's just a little bit less risk of things because there with the VAs, the FHAs, the 0 or 3% down loans, all of that, and USDA rural development loans, those things, you do have a lot of stipulations and things that need to be done. So you need to be aware of those whenever that appraisal does come out. So those are big ones that I would have there. But so that would be a reason as to why people put down that 20% down and everything there. Nothing wrong with it. Nothing, it's not wrong one way or the other. My goal for you is to get you into a home and into a home that makes sense for you, right? And I think that's the biggest thing, that people get so scared of being out of a home or not being into something, and they just say, you know what, we're just going to rent for now, which is fine if that's where you want to be. But I think for me, the biggest thing, I mean, shoot, I've had clients of mine that they're like, oh, I don't know if we can do it. I don't know if we can swing the budget, I just talked to somebody about this last week. They bought the house in 2020. Well, what happened in 2020? Right? The market just skyrocketed. So now, if they would not have bought and they would have continued to rent, what would have happened is that they would have been renting, and instead of having a nest egg that they can now sell this house and upgrade or change or do whatever they need to, now what they have is now they have the ability to take that money that they would have lost or have been losing because of that, and now they have the ability to go in and roll that into another house or roll it into some other things there. So versus waiting, historically the real estate market always is on the uptrend. Now we are definitely in a slower market right now, so things are a little bit tougher, a little bit tighter for sellers. But that's just part of it, right? So it's just the ups and downs of it all there. So the big question, how do you decide what is right for you? So the big thing that I always talk to with my clients a lot is just having that discussion, right? Do you want your low down payments? Do you want more cash in the bank? Do you want everything involved, right? Like, do you want no money in the deal? Like, I've got a client right now who he wants zero money in the deal. He's a military personnel, so we are going to get him into that house for zero money in, out of pocket, I mean. So I think you need to decide what your goals are, right? Low down payment, low monthly payment, or more cash on hand, and to do fixes and furniture and things like that. For me, when I bought my house, like I said, what I chose to do is I put down 10%, put down 10% down on my house, and then I used that additional 10% that I had because I was selling a house. I used that additional 10% and I put that money into the kitchen. And so I gutted the kitchen, redid the cabinets, redid the countertops, like did everything, right? And I think that's the big thing, is understanding your goals and what those are. And that's a lot of things that you and I will talk about if you choose to move forward on buying a house or whatever that looks like. So those are the big ones that I would say, that just know what your goals are, right? Know what your end goal is and what that can be for you and your family. I put together a simple down payment cheat sheet. It goes over the loan programs, the loan types, the pros, the cons, the down payments, and all that stuff, what that looks like. So I put that together, put cheat sheet in the comments below, and I'll go ahead and send you over that cheat sheet for that down payment cheat sheet. I would love to get that over to you just so you get some information, right? Totally free, totally informational. I'm here to help. I want to make sure that you are getting the right stuff and getting correct information as well. That's always a big one. So wrapping it all together, I want you to know that you don't need 20% down. It's just having a good plan, having a good goal, and understanding what steps need to be taken, right? And I want you to make sure that that is the main thing that you pull from this video today. So as always, you guys, thank you so much for watching these videos. I truly, truly appreciate it. If you have any questions about buying, selling, investing, or just anything real estate related, I want to help you out. I want you to reach out. My personal cell phone number is 785-477-5485. My email is kyle@homesforsalemhk.com. And please, if you haven't done so already, go ahead and hit that subscribe button. Go and hit that little bell so you get notified of any future content that comes out, because we do try to post videos every single week. Make sure we get you taken care of on that end. And if you have somebody who is interested or just wants to know a little bit more information about what it looks like for money down payments, all that kind of stuff, share this video with them. I would love for you to do that and just kind of help them and educate themselves on the process. So until next time, thank you so much for watching. We'll talk to you then.